Great and beautiful morning, afternoon, and evening to you, or wherever you are joining me at this moment. I say welcome to 164th edition of Investdata Trading Academy Live with Ambrose. Yes, this is the last trading day of the month of October, and I'll tell you that the market is also opening on a lower no sentiment or edging lower again at this hour to kind of reverse what we saw in the matured market the previous week. Market is starting this new week, being the last end of the week, on a what on a more negative sentiment this morning, and this has a lot of also kind of economic data that is emanating from the eurozone and also some of the no big tech name, no earnings that came to the market. Markets are adjusting to it. And also don't forget that this week is also the big week that all eyes on what the outcome of all the Fed meeting in US. That alone is also kind of putting a damp investors sentiment for the market. But don't forget that we're already at the peak of the earnings season, and that has played the market for now. But being ahead of the Fed meeting, like I said earlier, that the outcome of Fed meeting determine what will be the next for others. Like more than 243 central banks are high rate all this while following the trend that we are seeing what in the Fed, central bank. For me, I believe that those data that are coming now, the one that came before now, shows that yes, the possibility of Fed kind of slowing down their rate is there, but I think the action will determine from our forecasting that 50 basic points for interest for rate hike for Fed, which is the U.S. Central Bank. Why the inflation figure that came from eurozone this morning was not too impressive, hitting almost 10.70 against the 9.8 they saw in September. But you can see this is that what is happening already there, and this also will combine all the kind of conform with what the eurozone and central bank did by hiking rate by 75 basis point just last week here. You can see that it's like they have already what happened. This was just going to take inflation, but like we have said earlier that the World Bank and IMF have started going to hint on this that continue to fight inflation with interest rate hike will usher the economy, global economy to recession, and that's why the kind of expectation of slowdown from Fed is we're looking up to see. But I believe that this is also a situation that investors want to see this volatility up and down, even at the earnings season also enter its peak. I tell you that today you see more company, and these numbers are coming also. Investors are expected to react to these numbers, but due to the all eyes being on the Fed policy meeting on Tuesday and Wednesday this week, that also is what is driving investor sentiment as we speak now. Expecting that the Fed, the bank, will also deliver another another straight forth 75 basic point, while others are expecting that it's time for them to slow down. If not, the economy might also go into recession. But the good thing is that the numbers that are coming are giving investors insight what they should do and where they should expect dividend. Because I will tell you, both in the advanced economies or market and even down here, we have seen a better than expected earnings from companies in this domain, and that's especially from the banking sector and others from other sector. You can see that these numbers are what's going to play on what investors will be doing now, going forward. Other we have seen these numbers and also expect to see the GDP for third quarter for this our own domain here. But I believe that what is happening in international market has the way of stable down here. But I believe that once we get it right, we should not so panic here. Here you can see the move the central bank is making. Some are, there's a kind of controversy in that move, but some are seeing that some sense. But let's watch and see how it's going to play out going to the future. But you as an investor, these numbers will give you more confidence. But you can see that it is not only here that this crisis of liquidity is all over the world now. Even as better numbers are coming in this mature market, we are seeing that their numbers, the price of stocks there are still struggling to inch up or to go in a northward direction. Also here in Nigeria, with the inflows of earnings we have seen in the market recently. This today is the first trading day of the week and the last day of the month of October. We have not seen more reaction to the market, but we are seeing that yes, it's improved buying side and selling side on the look at the market when we come to chart. But I will tell you that as we speak now, all the index in US market is in red, and that of also in Europe they also mixed. For Asia, I will tell you that this continue no mixed number from China is not supporting, it's not helping matter for Asia market. They're going to see up and down in what in the movement of the numbers of the price of equity there as a result of this no cautious attitude of investor in that domain because of the current figures that are emanating from that no zone. For that, investors are very careful to know how to play. Like if you look at the manufacturing no figure that came from that zone from China, you can see that there's a decline. Kind of signaling already a contraction because we see that the two both the manufacturing and non-manufacturing index or data that came is below the 50 basic point. I will say that now they are having as October around the 42, 49.2 and the 48.7. These are the things that also this already pointed that these people are still struggling. And don't forget that the coronavirus has not also helped them because of relative lockdown here and there in that environment. This also affecting the share market now. To speak now, share market is also in red. Africa is mixed, but we can tell that the NGS here, the whole market, is already in red, about almost 0.50% down. And that's a lot of what the high cap stocks result and market reacting to them. I can see it affecting the general market. And this is the time for every investor in this market to start looking what the way of what of the sectoral index, especially in our market from here. If you really want to invest profitably, it's for you to keep your eyes on what on sectoral what indexes. If you see those performance and then you give an insight, then you now keep your eyes, tailor your video to that stock or that company you want to invest, and also look at their chart to give an insight what is happening. We are seeing a positive trend coming on the banking index already. We can see that one insurance and one other one, but you need to also look at them to see yes where are they going from here and which companies or that make up that index that are contributing. But if you look at the banking sector and look at the companies or the banks that really compose that, they can tell you that the first five or what call them the first year, which is the Fuga that make up, and for this Fuga, I see that their numbers are still positive and strong, pointing that there's a policy that is impacting that sector, but they will continue, and that you can see that the index has changed, contrary to what other indexes are doing, even the general market index are doing. That's why I said this is the time for you to look the way of what the market, the sectoral index to get the real position we are going. You can see the performance from this Fugas and other secondary banks that this sector is looking good, and that I referred to. I said if you look at the market alone, you will be also discouraged. But looking at this sector will help you to make what informed investment decision. That's why your chart is very important. You can see the impact of liquidity in the system. Just like we are now in the market, we are not seeing much reaction as expected because liquidity board who believe that as due diligence is being done on these numbers by various PFAs, analysts, investors, and fund managers, and all or market operators. This also was the static position on the strength of the number. We might see improved activity, but the numbers are giving us insight to what we expect from this company, especially when it comes to their dividend at the end of the year. Especially for those that have what December at year end. We already seen their third quarter. We are already entering the month of November, and end of the year seasonality around the corner. We need to also balance all this to make what information. That's why I tell you that even though we are not making much appreciation in capital in price appreciation right now, you can look at what those company that has good dividend policy that at the end of the day, when after election has come and gone, then you cannot see what the market is. But I believe that this is time for to start buying to value for those that are looking for where how to create wealth in this period. This is what to do now. It's not the time to panic in the market at all. Yes, we want to look at some earnings that hit the market over the weekend, and also we'll discuss some in the Q&A session on Saturday. I know that class was so interesting, and if you are there, if not, you have to subscribe to get what the replay of the class. But we want to discuss some of these numbers so far. Not that really, we'll dwell more on the banking numbers in that section. Today, we're looking at what is happening in my first sector and others. We'll look at especially the industrial goods, what has happened to their number, and how this number should guide you as a investor or trader. Like I've said earlier, that what is happening in the banking sector is a result of what policy or what is going to happen in this industrial goods. What is happening? They are successfully before now move their price higher. Are they tending to pass their price up again to investors because there's a level that you can move your prices up? It will affect your sale. People start less demanding for your product. That also affect your turnover and other stuff. But we want to look at how they're going to play. And don't forget, as we are going to election, and also expect that any government that comes will continue this infrastructural drive because of the gap we're seeing in that sector. That also will be a point for kind of a boost for this company. But cost of operation and cost of finance have shown in this sector also and other manufacturing sector that you can see the huge turnover they are making. At the end of the day, you are seeing a team or a slim bottom line to tell that cost is really eating into them, and that is not news again. We know what is happening globally and also in the domestic economy here. But before we go to look at the chart, we want to look at the number that came from the industrial goods and few others that time can take us to look at. We want to start with the number that came from Lafarge Africa. I know you have seen it, but let's just discuss it so that you get more idea and also add to what you have also seen. If you look at this figure, I will tell you the if you look at all the whole standard for equality earnings, I think this number also has it. Apart from not meeting the ratio of 15% of the PAT, you can see the impact of what of course. But when we go along, you see what I'm saying. If you look at the turnover or revenue, anything we call it, it moved from 219.2 billion to 269.8 billion. Represented about 23% up for Lafarge or what we call it. But if you look at the the PAT, which is a profit after tax for the period of 9 months, it moved from 40.39 billion to 44.7 billion, about 11.1 or 0.2% up. And in that direction, this PAT of 44.9 billion translates to 2 naira 79 kobo for third quarter earning per share against 2 naira 51 kobo in 2021. You can see there's improvement. On this note, with this number, we can forecast that this company can achieve roughly around 3 naira 50 kobo or 380. That means dividend of 2 naira to 250, even 3 naira is possible from this company. Don't forget, last year they did 2 naira with 1 naira interim and 1 naira final. But now they were not seeing interest sign from them, but it decided to announce it. But if no interim, expect that nothing less than 2 naira or 250 should come from from stock like Waco at this point. Looking at the price is selling and what we expect. And you can see the part of the cost I mentioned earlier. The PAT, the PM, which is the profit margin, dropped from 18.4% to 16.64%. You can see even there's an increase in turnover, you can see that cost actually reduced what the profit margin. That means in every 1 naira turnover they have made there, about 16 kobo or 17 kobo is sitting as profit. You can see the huge impact of cost. But if you move to Dangote cement in the same industry, I'll tell you that Dangote number is missed, and also despite the notification that they like also to do the buyback as usual, and which they are waiting for approval. But I believe that the price is coming down. At this point, those that are traders in this class will be targeting a strong support level, because once the approval for the buyback also comes, you know that most times it doesn't pass more than 2 or 3 days their buyback move. You can take advantage of the price pulling back to targets which are not for dividends for traders, but for that looking for dividends. When dividends will come, don't forget that this company are consistent in their dividend payment. Also, they apply what we call a dividend policy polarization, which is also good. In a dividend polarization policy, which is equally good for them. But the price as soon as is coming down to reflect the numbers also that were related to the market that was below market expectation. If you look at what happened because I read that I believe as a trader that as I see the number, it is the reaction that we're going to see on the chart. I tell you that your chart is very, very important. How is market responding to this earnings? You see it, then that's how to invest. But this number will give you an insight where you also look at, like now seeing that the price of Dangote cement is dropping because of the result, and also we expect that when they got approval, when they get approval for the share reconstruction, the buyback, now we also give kind of support the price of that. That means we want to target strong support level for this Dangote and enter, so that when they come to buy back and go back around now also 280 again or 270 from the price we're seeing now, that was a good return on the short term, especially in this end of the quarter, end of the year seasonality. After that, yes, this company maintained its turnover to remain what in trillions, moved from 1.02 trillion to about 1.2 trillion, about 15% up, which is good. The PAT also moved from 278.3 billion to kind of a drop here. The PAT dropped from 278.3 billion to 213.7 billion, 23% down. You can see this switch for the period of 9 months. And don't forget also similar thing happened in their half year. You can see that trend is continuing. That is what to guide you. They might have not to pay what they paid last year, but you have to don't maintain it because of the sales structure and the nature of the owners. I tell you that you do where the billionaire is, but this billionaire they would like to pay themselves. But on the number of what we are seeing, if that comes down, you want to wait for a dividend, it's opportunity for you to accumulate. For those that are traders, because of also the expected kind of buyback, they have notified the market to show the what the release. That tells that once they get approval, that will also come in. You cannot enter at lower price, and when they come, you can also take advantage of it. Also look at the EPS. EPS dropped from 16 naira 33 kobo to 12 naira 51 kobo. You can see. And last 2 years, they paid from the reserve before they were able to cover up in the last 2 years, like 2020, 2021, able to meet up and they pay good dividend from their earnings. The previous 2020 it was like from reserve, they paid the same amount they paid that same 2021. But now we're seeing that the third quarter earnings have dropped from 16 naira 30 kobo to that also to give you a sense of direction of what you expect. That's why the price is coming down now. Should be earning more for what for trading. That when it goes to a good support level, you can position because the way the earnings are going, unless you want to also repeat what they did 2020, they are going to the to please maintain the same amount they paid there in 2021. But let's watch and see. The profit margin also dropped from 27.4 to 18 to reflect cost and also the performance that we have seen so far in the company. But we want to look at what happened also in BUA. These are the three major company in that industrial goods cement related companies. You can see that BUA and what I'll tell you their numbers are looking better compared to what we saw in that of Dangote cement. You can see that BUA also maintained a top line about almost 41% up from 186.9 billion to 262. But if you look at far that the price is, we can see the earnings is even for me more better compared to the price. You can see how you can get good dividend yield from that company. You should also go ahead and look at. We are buying these two stock now at 70 naira and at 23. You get more unit worth for you to get more dividend. These are the simple mathematics you should do as an investor at this period. But if I look at that, it moved from, as I said, 186.9 to 262.6, depending about 41% off of turnover. PAT also was positive from 65.9 to 74.0 billion, at about 12%. You can see 12% and 11%. And yes, but if you look at the earnings, you can see that almost earnings are the same, but you can see that of Waco is far better and by the price. The earning per share for Boa moved from 1 naira 75 kobo to 2 naira 19 kobo. Boa moved from Waco moved from 2 naira 51 kobo to 2 naira 79. You can see, but you can see that for me, I feel more also efficient and also more business in Boa. Boa profit margin is about 28.18% for the 2022 result, while that of Waco is 16.6. You can see these are the things we want to look at. But finally, let's look at these two before we call it a day. We want to look at the result that came from MTN. And these two stocks that result came last week or over the weekend. The one from MTN was very impressive, but the one from Dangote cement was missed. I can see market right, but so according to this one, we're seeing that market also having about 5 naira set now in MTN. But I'll tell you, MTN number and where it's going. This is a promising pointer that investors should put their position, and also you as a design investor should know what to do with kind of company that has come to say, and not only that they are kind of increasing their worth or boosting their cash flow, operating cash flow, and that's going to reflect over on the earnings. These are the things to look at. If you look at the MTN third quarter result, it moved from 1.2 trillion to 1.5 trillion, about 21% up in terms of growth for the turnover. And also PAT moved in that direction, super powerful also from 220.3 billion to 270.34 billion, representing about 23% up. You can see these are 2 digits up, and I tell you these are good numbers, and also it beat all our. You can say this is a quality earnings, and also that has a direction that maintain consistent quarterly growth. First quarter, second quarter, and third quarter for me is a good stock to also look the way. And so that also the the EPS moved from 10 naira 82 kobo to 13 naira 28 kobo. Powerful, this is a good one. You can project from this earnings of about full year of 16 naira per share, and they pay you interim about 4 naira before now, then a dividend of 10 naira is possible from this company. If that at the end of the day, that would be very good for the price. Yes, if you look at the price is selling, you can see the price also down is selling. Yeah, you might say that no, these are the types to look at where you should put your money now and what will drive that sector's activities. You know that this company recently we saw about European investment company putting money kind of to assist them expand their operation, also to make sure that their 5G become active in terms of operation and all stuff. It says that they also knowing the potential. They also know the potential of MTN. That's why they can give them such loan also to expand their business here. That's also giving insight that it's possible that anyone from now you can see some foreign investment coming to that company that will change the face of the store. And so you that are taking the future, it's time to start building this kind of investment in this kind of stuff. Then the profit margin from the period also yes moved from 18.18 to 18.6. Yes, an improvement despite that the cost intensity of this industry and what is happening in that space with the inflation and also cost of energy. You can see that it's also eating up in there, but still it's a good result in terms of profit margin above 15. For me, it's okay. Then the final one we're looking at is the vital food. This is the only unaudited account we're looking at today. The next one here is a Nimet that has a temper. This unaudited account that came from Vitafoam. Vitafoam revenue also moved from 25.4 billion to 46.5 billion. This is huge, and that's about 83% of good. But the cost of operation between the cost of say other costs, I can see that the profit margin, the profit after tax remain what for me is too lean or no lean for compared to what we've seen the kind of new market that enter and the sales they made for the period to show that yeah this company is expanding. But looking at the PAT, I'll tell you this is just a marginal growth from 4.6 billion to 4.93 billion. It's about 7.4% up. For me, this is very slow or very small growth in terms of PAT, and that also left the EPS to remain for me not too attractive at this point because it's still below what 4 naira for full year. It moved from 3 naira 68 to what to 3 naira 95. But for dividend income, it's possible that now I've seen the full year. Let's the number is coming, I'm going to that, but this is the full unaudited account on this strength of almost 4 naira. We expect the dividend of they paid I think they paid 150 kobo the previous year. 2 naira or 2 naira 20 kobo is possible depending how generous the company is and also their dividend policy. You need to know also the payout of their payout from their earnings, what the payout ratio of this company from this almost 3 naira 95 or 4 naira. You know exactly what they're going to pay. The profit margin dropped from 18.1% to 10.6. You can see high cost of operation. I know that this company has also have more operation beyond Nigeria and so some African countries. If that this cost that we're saying is all over, you can see what will happen to Ethel result also to reflect the high cost of what operation around the globe. You can see that now these are companies you and I should be looking at on how to take advantage of these numbers we are seeing to grow our dividend income and also protect our fund because this number tell you where you should put your money on the strength of what on the strength of the sector where they are and expected their what income going into the future. There's no cause for alarm in the market. I will tell you, but rather invest what wisely to take advantage of the market at any given time. You can see the impact of liquidity. If liquidity improves today, it can change the dynamics of the market and everyone will be surprised. But for those that are thinking where to preserve their money because of inflation, I think we're seeing some stock already giving you kind of any yield above what or dividend yield above what inflation doing. If there's also add to work capital acquisition between now and in the next 3 to 4 months, that should be where you should also be looking at to invest wisely. Yes, we want to look at the market, what is happening in the market life now before our time is fast spent. We want to look at the market as we speak now. The market is doing around I said earlier the market is down by about 0.5% down. Market is doing after I've broken down another statistical line at Friday when it broke down the 44,000 to 43. Now at this oil doing 43,677.45 point, representing about 235.19 point down, which is giving us the 0.5% in terms of what in terms of percentage. But if you look at the market rate is also negative, slightly negative, but having 18 losers against 16 gainers. And if you look at the trend, you can see that the high cap stock like Dangote, cement is one that also affected the 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 trend as we speak for the market. And also I said MTN is also down marginally by 5 naira to around the 1 naira 92 kobo. These are the things that's also affecting the market as we speak at this hour. But if you look at the top users, after I've told you that we have about 18 users now. The top users were seeing that the international brewery, Champs and the Kida Hotel, Yoka, and the Regency Insurance. These are the top five users as we speak now in the market. And among the sustained gainers, we are seeing that NACO is leading, followed by NEM Insurance, we are seeing Mutual Benefit and Access Corp. Access Corp is gaining about know, around 10 kobo to 15 kobo now as we speak. These are the top. But if you look at volume, I tell you that volume also is very, very important. Look at the volume. Transport is leading in terms of volume, followed by sovereign trust insurance. And see NACO there. GT code is also on that list, and the selling bank in terms of volume. These are the the state of the market now. But for because of our class and our time, we want to look at the few stocks before our time is fast spent. Let's look at the market performance and tell us, like I've said, look at the banking sector index. This is the market index now. But quickly, want to look at the index of other sector of the market. Let's call them up now to see how this index are doing. This for the market. You can see that index is still making a lower lows already, as you can see in this chart this morning. It's still making a lower low here. You can see it here. To draw down, this is also representative of what a bearish channel. So let's look at the other sectoral index now and see what is happening there with the market situation. Let's look at what is happening in those that NGS banking. Let's see what is happening in those sectors as we speak now. Let's start with the NGS 30 to see what is happening there. You can see NGS 30 is almost having the same trend with the general market. You can see that the high capital and other blue chips and what make up the same NGS 30. You can see it now. The NGS 30 is also probably, you can see it down here. So let's look at the banking sector proper to see what is happening there. That will help us also to get the big news here. Let's see what is happening for banking sector. NGS, I want us to look at that banking sector together. NGS, NSC banking, NSC banking, sorry, NSC banking. Yeah, we can get the NGS banking here. You can see it here, guys. If I want to call it up, I want us to look at it together. Fine. Yes, you can see this chart for yourself here. Let's quickly look at this chart because this is what we'll be doing as we are seeing on this earning. Look at this chart from here to this point. You can see that the market started after coming down as low as this basic point here around below 360. The market index divided and saturated around this point and oscillated up and down. Now came down up. You can see that it's not, another one that's picking up as we speak now is this sector. Others are still making downtrend, but this one is once you break out this strong support level here and here up, that was also a new trend. But the major place to look at is this point that is attended for this. So once able to break out at this level, that's around around 30 about 390 basis points for market index. That will give us an uptrend that is very good for the market. We need to also expect to see that if that happens, that will give us a good trend. So if I see from here to here, you can see that from here to here, I see this trend. See this trend. You can see this from here to here. You can see this point here. Once the market the market does break up, that will be the first sector. And I tell you that in any market, instead that one stock will lead the world, will lead the bull back to the market. Also can usher the market to a bear situation. Can so what happen in the life of Airtel. Airtel one that brought the market to this situation, and other one sector and also one stock on the exchange can also change the trend if the bull run also or the usher in the bear bull run in this situation will come from the banking sector. It depends how market react to it. Especially don't forget that this sector is the most consistent in dividend payout. If that continues, we expect to see improvement in this sector. Once the break out is, for me, I see this step. Let's just see the index I look like. You can see that it has traded down here. Sorry, we have been on the downtrend from here down to this level. Here's kind of a side trend. Here, which it did, it came down, come up again, didn't break out this level. But now we see that after it had made all this journey down here, we're seeing a recovery. If market break out this first line here up, that was a usher stronger bull rally forward for that index. That's why I'll tell you, look at what sectorial index and individual stock and those companies that make up that index at that particular time or period is very important. For me, I think for today, this way of stop the class because of our time. As for tomorrow, we'll continue more on earnings and also how to trade within the chart and also combining the chart and the fundamental. Now that we are seeing that the what price feed on this earnings, but we are still yet to see this earning making much impact on what on price. Why? Because that was liquidity start coming, and also this analysis of many players in the markets also start taking vision with their portfolio problem. We're going to see the market reversing up any moment from now. But might not be as fast as we have seen before. But I believe that once the PFA return fully, the smart money might see. But now they are still waiting to look at. Don't forget that also that the physical market, is still looking up. But I believe once the inflation figure also for the month of October, like when will also come. Once you hit about 21, it's also going to be another point again for people to look at their portfolio very well and come to the position to work to hedge against inflation. On this note, to say thank you for your time and also see you tomorrow, hopefully by God's grace. And also as information about upcoming investment today, also get ready before Wednesday. Also let you know on this platform. See you tomorrow and enjoy the rest of your trading day.